big deal here is not just regulation, it's permission. Permission for bigger capital, bigger companies, and more serious infrastructure to enter crypto without feeling like you're walking into a legal minefield. So what does the Clarity Act actually do? Very simply, it tries to create a rule book for digital assets. The bill itself highlights it is an act to provide for a system of regulation of the offer and sale of digital commodities by the Securities and Exchange Commission and commodity futures trading, to amend the Federal Reserve Act to prohibit the Federal Reserve banks from offering certain products or services directly to an individual. The simple version is, the bill tries to separate digital commodities from securities and to create a platform for brokers and exchanges to operate under clearer rules. And that distinction is huge, because if every token is treated like a potential illegal security, then the industry can't scale properly. But if there is a clear path, then exchanges, projects, funds, and institutions can actually plan and position appropriately to the rules. But there is one part of the bill that has caused a massive fight: stablecoin rewards. Banks are worried that if crypto companies can offer yield rewards on stablecoins, deposits could move away from traditional banks. So the compromise appears to be something like this: passive stablecoin yield restricted, activity-based rewards potentially allowed. In other words, you may not be able to just sit on stablecoins and earn bank-like interest, but crypto companies may still be able to offer rewards tied to usage, trading, transactions, and other activity. And that matters because stablecoins are one of the most important bridges between crypto and mainstream finance. And markets clearly understand why this matters, because regulatory clarity is not just a legal story, it is a capital market story. After the committee vote, crypto-related stocks like Coinbase move higher, because if institutions finally understand the rules, they can build products, they can allocate capital, they can custody assets, they can list markets, they can integrate stablecoins. And that is when crypto starts to move from speculation to infrastructure. And this is the part I think people may be underestimating.